Germany has struck a compromise over a controversial move to allow a Chinese shipping group to buy a stake in a terminal at Hamburg Port. The deal is contentious because, at a time when Germany is trying to wean itself off Russian energy imports, it is seen as increasing dependency on China. The purchase could open up the possibility of Beijing politically instrumentalizing part of Germany's and Europe's critical infrastructure. On Wednesday, Germany's government agreed to allow COSCO Shipping to acquire a stake of less than 25%, instead of the previously planned 35%. Germany's Economic Affairs Ministry said the decision was made to prevent a strategic investment by COSCO in the terminal and reduces the acquisition to a purely financial investment. Whether the Chinese company should be permitted to participate in the port's ownership had produced a political dispute as Germany wrestled with the consequences of its dependence on Russian natural gas. Germany's government considers ports to be critical infrastructure, allowing officials to screen and block acquisitions of larger stakes in shipping facilities by non-EU companies. According to the Hans Böckler Foundation, which is linked to the German Trade Union Confederation, about 193 Chinese investors acquired 243 German enterprises either partly or fully between 2011 and 2020. More recent figures provided by the EY consultancy show that from 2016 to 2018, the number of takeovers by Chinese firms fell 40%, but re-accelerated again in 2021 to 35 acquisitions, up from 28 in the previous year, according to the latest available data. EY's head of Greater China Business Services, Yi Sun, thinks the ups and downs in China's overseas investments in major industrialized countries are because of increased attempts by Western governments to avoid future dependence on China and generally curb the influence of foreign companies in their national infrastructures and domestic security. In regard to China, such concerns are not entirely unfounded, a study from this year by the European Union has found. Commissioned in the wake of Russia's invasion of Ukraine, the EU survey found that, of 137 goods and products deemed critical, almost half are supplied by China and only 3% by Russia. The goods investigated mainly concerned the healthcare sector and renewable energies. In 2016, Germany learned the hard way that foreign direct investment from China isn't always a positive development. That year, the Economy Ministry couldn't prevent the full takeover of Germany's flagship robotics firm, KUKA, by the Chinese company Midea, a manufacturer of dishwashers and refrigerators. As a result, foreign takeover and acquisition laws were hastily upgraded in Germany to avoid future unsolicited bids from abroad in such key economic sectors as medical technology, energy supply, and telecommunications. Later, artificial intelligence technology was included in the list of protected sectors. German Chancellor Olaf Scholz will press China to open up its markets and will raise human rights concerns next week in what will be the first visit by a European Union leader to China since the start of the COVID-19 pandemic, Berlin said on Friday. Scholz will visit on November 4th at a time of growing concern in the West about China's trade practices and human rights record, as well as anxiety over Germany's reliance on the world's second-largest economy. It also comes amid a festering row within Scholz's three-way coalition over whether to approve Chinese investment in a terminal at Hamburg, Germany's largest port, which Scholz is pushing through despite the security concerns of his ministers. The German government spokesperson told a briefing on Friday that Berlin's view of Beijing had changed, but it was against decoupling from the Chinese economy and wanted Beijing to show reciprocity in trade relations. The German leader has faced criticism ahead of the trip for pushing through a cabinet decision to allow China's COSCO to invest in a terminal in Hamburg. This came despite strong pushback from his coalition partners amid concerns over Chinese influence over critical infrastructure. Berlin is also still examining the potential Chinese takeover of the chip production of Dortmund-based company Elmos, ELGG.de. We are yet to know what is going on behind the curtains of the new Germany and China trade alliance against the tensions between Europe and the Asia giant. What we do know is that Europe is desperate to get things going for their economy and would go to any length to get something done before the cold winter. Will this desperation be their undoing? Will Germany become a loophole for China to get traction in Europe? Let us know what you think of the new development in the comments section. Remember to like the video, subscribe, and turn on notifications. Thanks for watching.